Hello friends, welcome to Priceinpedia. So the stock which I wanted to discuss with you guys today, the name of the company is 𝗗𝗜𝗦𝗟𝗏𝗦. It's a very interesting company, and if you look at the chart of the company or if you look at the fundamentals of the company, both are telling us the same story that company is in an uptrend right now. Company is in a stage 2 uptrend right now. Now, to understand this company, we'll have to first understand the sector to which this company belongs. This company belongs to the textile sector, so we have to first understand the challenges and the opportunities as far as this textile sector is concerned. Once we have understood the textile sector, our next focus would be on understanding the fundamentals of this company, and thirdly and the lastly, our focus will be on understanding the technicals. Technicals will tell us whether the fundamentals which we have studied are being reflected in the price movement of the chart as well. Okay, to start with, let's first understand the textile as a sector, what challenges it faced and what opportunities lie ahead as far as this sector is concerned. Now, first of all, textile sector didn't do well in last 2 years. Why didn't it do well in the last 2 years? What was the reason? There was a recession in this sector. The most important reason was the geopolitical tensions as far as the companies were at war, and due to which there were a lot of supply chain issues, and those supply chain issues affected these textile companies very badly, and that led to the fall of their prices. Secondly, there was low demand and the interest rates were high, and then there was a lot of inflation also, because of which uh, uh, these companies, this sector suffered very badly. Thirdly, the inventory was at all-time high, and when the inventory goes on to all-time high, what happens is that they have to sell off their goods at a very low price, and when they sell off their goods at a low price, what happens is that their margins get affected, their EBITDA margins get affected, and the profitability falls. The other reason for the textile industry fall was that the cotton prices were at a high. After the COVID scare, the cotton prices rose very much, and that led to the decrease in margins as far as these cotton companies are concerned. Their input cost increased because of the increase in the cotton price. Other reason was that the electricity and gas prices were also high, and that also led to the fall as far as the textile sector is concerned. Now, all these 1, 2, 3, 4, and 5 points which I have discussed, these 5 points are not no more there now. As far as the geopolitical tensions are concerned, they have eased out. Secondly, the demand is very high. And the interest rates are falling, and the inflation is also falling. At the same time, inventory is at an all-time low right now. So when the inventory is at an all-time low, that will definitely lead to the increase in the demand. At the same time, if you look at the cotton price has also fallen a lot, so that will also decrease the input cost of the company, and they'll have better margins. At the same time, the electricity and gas prices have also dropped, and that will again decrease the input cost, and that will increase their margins as well. Now, the companies which I am tracking right now are Sport King, Gokex, KPR Mills. As far as Gokuldas Export is concerned and KPR Mills are concerned, these two are the industry leaders in this sector. And then there's a small cap stock called Phase 3. As far as Ashish Kacholia is concerned, he's holding a stake in this. Then we have Navhar Spring, Lux Industries, ICIL, Rupa, and Ganesh Ecospace. If you look at all these companies are not in stage 2 uptrend right now. All these companies are actually in a sideways trend right now, sideways to downward trend. Mostly they are in sideways trend, and few of them are in the downward trend as well. But there is one company, Ganesh Ecosphere, this is in a stage 2 uptrend. And this company has been only rising from last 8 to 12 months, I would say. If you look at the chart of Ganesh Ecosphere, you will understand that. As far as the current condition of Ganesh Ecosphere is concerned, there's slight consolidation happening. I think there's a ascending triangle formation in the Ganesh Ecosphere, and I am expecting that ascending triangle will break and the stage 2 uptrend will continue, because that's just a very small consolidation happening in Ganesh Ecosphere. Now, as far as the lead time of these companies is concerned, lead time of these companies in the textile sector is 3 to 6 months. So once they get the order, once the order is placed, they manufacture they manufacture it, and then the shipment happened of this product. So it takes them around 3 to 6 months. So what we are expecting that since the demand is increasing, so in next 3 to 6 months, even these companies which are not performing well, they will also start doing quite well. So this is the time which I feel is still there as far as these companies are concerned. But there is one company which I am about to discuss with you guys today. That company is already doing quite well as far as the price action is concerned. as far as the fundamental data is concerned. That's the reason I thought of bringing this company to your attention. Okay, before we study that company, we have to understand which countries are the world's top cloth exporters. China is at number 1 slot, Bangladesh at number 2, Vietnam is at number 3, Turkey is at number 4, and India is at number 5. Now, if you look at this chart, now it's a very interesting chart here. In this chart, we are trying to understand is that which companies are the major exporters to US. So China is a major exporter to US. But if you see, since 2018 till 2022, China used to export 33% of the clothing requirements to US. But it fell to 30 in 2019, then it fell to 24%, then it fell to 22%. I think it's below 20% right now as far as CY 24 is concerned. So China's dependency is falling, and that is due to the trade war between the US and the China, and this will definitely help the India for sure. Now let's come to the 𝗗𝗜𝗦𝗖𝗟𝗔𝗜𝗠𝗘𝗥. The 𝗗�𝗘𝗦𝗢 is a kids wear, infant wear products they make, and the company was started in 1992. The company is majorly export based company. It exports its products to Europe, it exports its product to USA also. Besides that, it also caters to the local demand in India as well. Now the quarterly results. The quarterly results are very important. That will tell us what exactly is happening in the company as far as the current situation is concerned. If we look at the quarterly results of the company, this quarter the revenue, the sales went up from 190 crores to 216 crores. If I compare September 2024 quarter with September 2023 quarter, the sales have almost doubled from 134 crore to 216 crores, right? And if I compare the margin has increased from 14% to 25%. And if I compare it with the last quarter, it has increased from 21% to 25%. Now the net profit of the company. If I look at the net profit of the company, if I compare it with September 2023, it has almost tripled from 13 crores, now it is 37 crores. And if I compare it with last quarter, then it has gone up from 27 to 37. So as far as the quarterly results are concerned, they are clearly telling us that there is an uptick in the company and there is definitely a turnaround. And this company is responding to this change in the cycle of this textile industry. And I think it's the first company out of all those which we saw. So this company is actually responding quite well and is actually in a stage to uptrend as far as these numbers are concerned, the quarterly numbers are concerned. Now, if you look at the P&L statement, the most important thing to consider here is that this company is making a yearly sales of around 600 crores, around 617 crores, and the profit is around 56 crores. Now, this is a very important figure because I'll be giving the reference of this 600 crores in our future, in our coming arguments as well. Right, so they are making a profit of around 617 crore. If I compare it with 2023, it has increased, but on a trailing 12-month basis, this sales is supposed to go up from 617 to 744 crores. But that is not the correct picture. If we look at the guidance which the company is giving, they are saying that in 2025 they will clock a sales of around 1000 crores. So that is a jump of around 60% as far as the sales is concerned, and a 60% jump in sales is the reason why I am making this video with you guys. Okay, now this is what is happening as far as the P&L statement is concerned. Now, if we look at the growth record of the company, in 2000, if you look at 2018, 2019 and 2020, the company was doing quite well. From 557 crores, it went to 607 crores, then it went to 739 crores. So this was the peak time of the company when the sales went up to 739 crores. But then the COVID came, and with COVID, the cotton prices went up. There were supply chain issues, there were war, and then the input costs also increased. The points which I discussed with you before. Because of all those things, what happened was that the revenue fell from 739 crores to around 445 crores. In 2022, again the huge demand came, and the company was doing actually very well. And then in fact, in this year they had given a guidance of around 4000 crores for 2025. Although they had clocked a revenue of just 788 crores in 2022, their guidance was that they'll make a revenue of around 4000 crores. So that was almost a jump of around 5x, 6x jump from 2022 revenue. But in these 2 years, in 2023 and 2024, we saw that global recession came. Why global recession came? I gave you all the reasons for that. The cotton prices, the input cost, and the war-like situation, which led to the supply chain issues. So because of those issues, what happened was that their profitability decreased. Again, the sales went down from 788 crores to 557 crores. Then it rose from 557 crores to 617 crores. If I analyze the 2024 quarterly results in the H1 of this 2024, we saw that the company didn't do well at all. But in H2, the company actually started giving better numbers and the profits were better in H2 of 2024. Now, based on this H2 of 2024, the company is saying that in 2025, they will clock a revenue of around 1000 crore. And this is a jump of around 60% from 617 crores. This jump of 60% is a huge jump, and that is the main reason why I'm covering this video. Now, it's not that the company has just said that they'll make a revenue of 1000 crores in 2025. They have also given a breakup of it as well. They have actually said that in quarter 1 they'll make 195 crores, and they did that. In quarter 2 they'll make around 225 crores. They have come up with around 221 crores. So this target is also met. In quarter 3 they are expecting a revenue of around 280 crores, and in quarter 4 they are expecting a revenue of around 300 crores. So this is the breakup that the company has given, and based on this breakup we can see that they can achieve this 1000 crore target for sure. Now, as far as the textile export market trends are concerned, so this sector is supposed to triple in 2030, by 2030. Currently, it's at around 34.4 billion, and it's expected to reach around 100 billion. So that is one of the main reasons why I am interested in this company and why I am interested in this sector as well. Now, the why this will happen. First of all, there is the China Plus One strategy which is happening. We have been hearing about this from last 3 years now. What exactly this means is that the US is decreasing its dependency on key Asian countries. Like on China, it's decreasing its dependency by 23%. On Bangladesh, it's decreasing its dependency by 26%. And on Vietnam, it has decreased its dependency by around 22%. So that will definitely be something. It will be good for India for sure. Now, the second point is the Bangladesh crisis. If you see, there was political unrest in Bangladesh, which led to which resulted in 50% less clothing production as far as Bangladesh was concerned. So that is again a plus for India. At the same time, the difference between Bangladesh was actually 3.2 times bigger than India in FY24, but now it has only 2.5 times that of India. So it has fallen from 3.2 to 2.5. That means Bangladesh has fallen, but India is doing quite well, due to which this ratio has gone down from 3.2 times to around 2.5 times. And the other reason why this textile market can do well is that there is a PLI scheme for textile sector likely to be extended to the garment sector in the near future, and that will definitely help the textile sector in the coming days. So these are the 3 reasons: China Plus One strategy, Bangladesh crisis, and the PLI scheme. And the most important reason is that in FY 2024, currently it's around 34.4 billion, and this market is supposed to reach 100 billion in 2030. So if this market can triple here, the companies will definitely do well. Now, if we look at the combined opportunity as far as the China and Bangladesh is concerned, Bangladesh has an export market of around 165 billion, and China has around 165 billion, and Bangladesh has around 38 billion export market. If we combine both, it's almost 200 billion. Now, there will be 10% transition. Okay, so that gives the opportunity of 20.32 billion, and here it will be a 50% transition, so that will give us an opportunity of around 101.57 billion. So if the company is saying if they service just 3.5% of this unaddressed market potential, that means this market potential of around 20 and 101, if they just address 3.5% of it, then they'll achieve their production target of around 0.55 billion very easily. Okay, now the immediate opportunity is 20.32 billion, and as far as the near term opportunity beyond 2025 is concerned, that is around 101.57. now they are saying if they service just 3.5% of it, then their target of around 0.55 billion will be easily achieved. Now the company is a very small company as far as 𝗗𝗜𝗦𝗢𝗥 is concerned. Its needs are not that big. It just as far as the revenue is concerned, we saw that the revenue is around just 600 crores for this company. Now there are two very important developments which are coming up as far as this company is concerned. So in December 2024, they will be starting their Warangal phase 1 plant, and in December 2025 they will be starting this Hyderabad phase 2 plant, and they are expecting that their revenues will go up from 550 crores to 5000 crores. So that means there's a 10x increase in the revenue. That means the revenue will go 10 times. So if the revenue goes 10 times, you can expect where the stock price will go. So we are talking about a 10x stock which can happen in the future if this thing actually comes off properly. If company goes from 550 crores to 5000 crores, तो definitely यहाँ पर एक मेजर एक्सपेंशन होने वाला है, और वो मेजर एक्सपेंशन इस कंपनी को बहुत ज़्यादा बेनिफिट कर सकता है, और जो प्राइस कैन गो 10x फ्रॉम द करंट लेवल्स वेरी इजीली. अब ये जो कंपनी है, इट इज शिफ्टिंग इट्स बेस फ्रॉम Kerala to Telangana, right? This transition, the plant which they are setting up in Telangana, so why this will help this company? इससे क्या मदद होगी कंपनी को? First of all, land cost जो है वो केरला में it's only 5 in Telangana it's just 5% of Kerala, right? तो अगर वहाँ पर अगर केरला में 100 रुपीज दे देते तो यहाँ पर तेलंगाना में इनको सिर्फ 5 रुपए देने पड़ेंगे. So you can see the land cost is very low. Secondly, 50% lower labor cost. मतलब if they were spending 100 rupees in Kerala, यहाँ पर उनको सिर्फ 50 रुपीज स्पेंड करने हैं. तो लैंड कॉस्ट भी कम हो गया एंड लेबर कॉस्ट भी कम हो गया because of this migration to Telangana. At the same time, 70% lower cost for water cost, right? तो 75% ये कम हो जाता है यहाँ पर. एट द सेम टाइम रॉ मटेरियल अवेलेबिलिटी जो है तेलंगाना में है वो ज़्यादा बेटर है, क्योंकि तेलंगाना इज द थर्ड लार्जेस्ट कॉटन प्रोड्यूसिंग स्टेट, एंड एज फार एज दिस कंपनी कंसर्न, इनका जो मेन रॉ मटेरियल है दैट इज ओनली कॉटन. So this will also help them. So these are the 4 key points. At the same time, higher availability of local labor and incentives in various amounting to 100% of capex as well. So these are the important points which will help them since they are migrating from Kerala to Telangana. So these are the points which will definitely help them a lot. At the same time, they are doing the in-house manufacturing of accessories. There is backward integration. At the same time, जैसा कि मैंने आपसे कहा कि availability of local labor resulting in a better labor cost efficiency. At the same time, expected labor incentives to be in the tune of 10% of the expenses, right? So these are the major advantages as far as migration to Telangana is concerned, from Kerala to Telangana is concerned, right? Now, as far as the customers of this company is concerned, they have very high profile customers like Walmart, Amazon, Carter, Sam Club, Tommy Hilfiger, Calvin Klein, Polo. So these are very well-known names, and these are the customers which they cater to. Now, this was all about the fundamental analysis of the company. Now, let's try to understand the technical details of this company. Let's try to see whether the chart is telling us the same story which we heard from the fundamentals, or is it any different from what fundamentals told us. Now, this was the time when the company was doing well, right? When the company was doing well, and this was the fall. Let's try to understand from this point here. This point we are interested from here because we heard the story beyond 2019, 2020, 2021. The company was doing quite well, so the price went all the way from around 34 rupees to around 200 rupees, and then we saw these 2 years which came along, and these 2 years were the global recession. I gave you all the reasons why that recession came, because of which the price fell, and this was the testing time as far as this company is concerned. After that, I told you that in H2 FY24, what happened was that the company started giving good results, and based on those good results, they predicted that they will clock a revenue of around 1000 crores, and they gave us a guidance of each quarter as well, and that this was the time when the equation changed in their favor, and we see that the stock is only going up. From last 4 months, the stock is only going up. From 200 rupees, the stock is already at around 767 rupees. Now the stock is currently at a monthly resistance. This 742 is the high of 2015. So the price is testing the high of 2015. It's quite possible here that we might see some consolidation here, and that consolidation will give us the opportunity to think about this stock. So guys, this is my analysis as far as this company is concerned. This is not a buy or sell recommendation. It's just that it's just my analysis, a techno funda analysis, which will eventually help you in making a decision whether to buy or hold this stock, and it will definitely make it easy for you. So I hope you enjoyed this video. I had a great fun in presenting this video to you, and I wish you guys a great weekend ahead. Thank you very much. Goodbye and good luck.